Hello and welcome to the Opening the Gates August 2024 UK property market update, where I'm going to be going through exactly what happened in August 2024 and the impact that we've had following obviously a general election at the start of July and the Bank of England reducing the base rate from 5.25% to 5% for the first time in just over 4 years. So what impact has that had on market activity? From new listings, sales agreed, mortgage rates, supply, demand, and what we can expect going forward. So as always, I'm going to jump straight into it and start sharing my screen. So to start with, on the Opening the Gates market update, we're going to be looking at August 24 versus July 24. Middle column is August 24 versus August 2023. And then lastly, we're going to be looking at the 6-year average for August. So on the market, i.e. properties currently for sale, there was a slight decrease of 0.5% on July, which is not to be unexpected, as August traditionally is a very quiet month in terms of school holidays, etc., etc. We'll go through that in more detail as I run through the update. Great news that in August there was 10% more property for sale versus last year. So again, more confidence, heightened positive sentiment in the market as well has meant there's more choice for buyers, but arguably there's also more competition for sellers. On board of repeating myself, as I'm sure you are as well, in terms of some of these points. And great news, there is definitely more stock available with a 19% increase on the 6-year average for August. So we had been complaining during the COVID market about lack of stock. There's definitely more stock available, which I'll continue to talk about as we go through each index. So new listings in August were 3.5% down on last month. Again, not unsurprising, considering the time of year. You'll always expect that in August. However, things are 9% up on August last year and 3.5% up on the 6-year average. Sales agreed were down just over 4.5% on July. Again, to be expected. They're up a whopping 21% on August last year. Again, not unsurprising, the positivity behind the election result, with that bounce that you typically would expect, and then the first base rate cut in over 4 years after, what was it, 14 rises in a row, followed by like 9 pauses off the top of my head. However, at 21% increase, we shouldn't be all jumping around for joy. A lot of that is just down to the suppressed demand of last year at the same point when we kind of peaked in mortgage rates. So if we actually look at the 6-year average, we're just under 2% down on that. Now, bearing in mind, we did have the craziness of 2021, 22 in amongst that as well, with some phenomenal market conditions with stamp duty holiday, record low interest rates, the race for space, the whole COVID market that we all know about. So to say that we're only 2% down is not bad going at all. Price changes were 10% down on July, again, not unexpected. Very similar to August last year, but still an issue as 27% up on the 6-year average. There's been some interesting data that's come out in the latest house price index from Zoopla, which very much backs up the data previously from Rightmove around price reduced properties taking longer to sell. So we know what impact that can have on the market. Withdrawals are down across the board, which again, I probably said this on the last market update, to me is great news. It means that there's more serious sellers on the market. They're committed to moving, which is great news for estate agents because that will increase the number of sales and then, of course, revenue and profit. Fall throughs are slightly down on last month, to be expected, as there's less sales agreed. But with sales being higher than last year, fall through rates are going to increase as well. However, quite interestingly, they are slightly up on the 6-year average as well. So I'll probably say this in every episode, but if you're not already getting reservation agreements in place or looking at that type of thing, or getting your ducks in line when it comes to sales progression, so instructing a solicitor at the point of instruction onto market rather than sale agreed, I would be doing that. And some really interesting data from 20EA as well, finding that the longer a property takes to sell, the more likely it is to fall through. We also know that reduced properties are also more likely to fall through. So there's some fantastic data out there from, again, 20EA, Rightmove, Zoopla, highlighting that pricing correctly from the outset gives you the best chance of selling for the highest price in the quickest time and not falling through. If you want to find out more around all those data points, please do reach out to me and I'll happily discuss them with you. And then relistings, so properties returned to the market, unsurprisingly again, down on last month of July, but massively up in August last year and massively up on the 6-year average. So there is clearly a returning trend here of sellers coming off the market and then returning with someone else. If you have not already received from me some really great data from Rightmove and Property Academy on the biggest reasons why sellers switch estate agents, please do get in touch with me and I'll very happily share that information with you. And so all in all, looking at the figures across August, we are moving in the right direction. But as it's been for a while now, and probably always is, it's a price sensitive market. So properties that priced correctly, presented correctly, and marketed in the correct way, they are finding buyers. But those who go on at too much money, don't have great marketing, they either end up failing to sell or they take ages and they have to reduce their asking price. So on to what's been happening to prices. So in August 23, the average price was 397.5. July it was 429, and then in August it was 407. So it's slightly up on last year, slightly down on last month. Again, you'll see from the Rightmove House Price Index, that's a recurring theme. Just going to look down at my notes. I've got average asking price up 2.42% on August 23 for new listings. It's about 5.10% down on July 2024. And an average pounds per square foot, £351 a square foot in August 23. That's risen to 384 now, and it was 381 in July. So whilst the average asking price has reduced from July to August, the pounds per square foot has increased slightly. So pounds per square foot is up 9.4% on August 23, and it's up 0.79% on July 24. Again, for those of you watching, if you want to find out more around utilizing pounds per square foot, please do speak to me and I'll show you how you can be utilizing it to increase your conversion rate, justify your fee, justify the price. But then also when it comes to negotiating with buyers, it's a great strategy as well. So sales agreed in the month of August 2023, it was just under 349.5. July 24 it was 364, and in August it was 357.5. So again, slightly up on last year, slightly down on July. I've got the figures as 2.34% up on August 2023, 1.85% down on July 24. And when it comes from pounds per square foot, it was 326 in August 23, 343 in July, and 341 a square foot in August. So pounds per square foot is 4.6% up on August 23 and 0.58% down on July 2024. So again, a very steady market there. And if you think there's only good things to come, because this data is when the bank rate really has been at 5.25% for that August 23, for that July 24, and then August 24 is obviously it's dropped to 5%. So there's definitely positives there, and that is backed up by the last couple of bits that we're going to run through. So net mortgage approvals for house purchases continues to be moving in the right direction. Again, I'm just going to look at my notes. Mortgage approvals were the highest they've been since September 2022, before the mini budget from Liz Truss and Kwasi Kwarteng. So great news there. So I've got July is around 62,000 mortgage approvals. June was 60,600, so it's moved up there. I believe that July last year was around 49,400. So real good news there. I think that the effective interest rate has remained unchanged at 4.81%, and the outstanding stock is up 4 basis points from 3.65% to 3.69%. So again, anyone waiting for mortgage rates to drop drastically, there's so much data out there highlighting that it's going to be a slow and steady, can't even talk, slow and steady drop over the next couple of years, rather than a drastic drop to, you know, COVID levels. So anyone holding off, they could be waiting a while for interest rates to drop, and we're not supposedly going to be seeing sub 2% rates, as I would have said before. What we're also going to look at as well is transaction levels. So this is from Land Registry. So this is going to be lag data. So completions in July probably got sale agreed earlier in the year, probably went on the market or originally valued in 2023. So again, these transaction numbers are from a time when the market wasn't as confident as it was now, wasn't as buoyant. didn't have the Labour landslide victory, didn't have interest rates coming down the way they have. So transactions in July 24, I have got as about 90,630. Very similar to 91,220 in June, so only 1% down, and they're up 7% on July 2023, where they were 84,600. So very positive around mortgage approvals and property transactions. And mortgage approvals are a good example of where we're going to see those property transaction numbers in several months' time. So all in all, very, very positive there. I'm looking at my notes, so I feel like there was one other thing that I was supposed to be saying. And annoyingly, I can't find it. So we'll come back to that if I can remember. As with all these updates I've been doing, there's no, as you can tell, polished or high production behind the scenes. It's literally me jumping in front of my laptop. I've got all my research, I've got all my notes. And I just want to explain raw, organically, authentically what's happening in the market to those of you who watch. So that's the opening the gate side of things. As always, huge shout out to 20A for helping me to go and run the numbers, collate the data to provide my update. And then mortgage approvals are coming from Money and Credit from Bank of England, and same with the transaction numbers as well. So let's move on to Rightmove. Some really interesting data in the house price indexes this month. So we've got August. Monthly average asking price drop of 1.5%. It's in line with the long-term average for August. Annual average asking prices are still up, and year-on-year increase in demand since the Bank of England base rate cut 19%. So some fantastic news there. If I just scroll through here as well, there's a few bits that I want to concentrate on. So if just run through it. So number of buyers contacting estate agents for sale has jumped from 11% in July to 19% in the August. So the elections had a positive impact. The Bank of England base rate drop has had a positive impact, and Rightmove actually adjusted their forecast for 2024, where they see 1% growth as opposed to a 1% drop in the market. Number of sales agreed, 16% ahead of the near peak of mortgage rates a year ago. And then new sellers coming to market is 5% ahead of last year. 5-year fixed rate mortgage is now at 4.8%. So again, about a 1% improvement on a year ago. And the best available 5-year fixed rate at 3.83%. That's at a 60% loan to value. And that's the lowest it's been again since before the mini budget. And it's that psychological breakthrough barrier of getting below 4%, which really has had a positive impact. Mortgages are not massively cheaper than they were, but it's that psychological barrier, as I said, below 4%, which is bringing more people back to the market. If you're not already getting this information out there in blogs, emails, video, social media, direct mail, sharing it with your team, I would strongly recommend you do so, because you have got to be creating demand rather than just keeping up with the demand that is already there. So if I just flip through a few more of these points that I wanted to speak about. So this bit here, new seller asking prices have fallen in the month of August for the past 18 years. So if you see any market commentators saying, oh, don't get ahead of yourself, prices are coming down, it's literally happened 18 years in a row. So even in the best markets we've seen, the asking prices have still dropped in August. And remember, it's asking prices on new listings rather than sales agreed. And the size of the drop has been in line with the long-term average as well. Very good points for Rightmove discussed here. So the distractions of summer school summer holidays traditionally bring a dip in prices as some buyers put their home moving plans on hold to enjoy holiday or time with family. This also means that new sellers who do come to market at this quiet time of the year may have a pressing need to sell, which means they tend to price more competitively. So yeah, great language there to be using in any market updates that you are doing. I think in terms of the other bits that I just wanted to share on Rightmove, they have said around so this paragraph I'm hovering, there are still some uncertainties ahead. We've got the budget in October, the timing of when the second bank rate cut will happen, and we've of course got a US election coming up. And the US economy does have a knock-on effect to what's going to happen in this country as well. We have seen inflation creep up a little bit as well recently, and they expect that to continue on through 2024 and then go back down in 2025. Sentiment has definitely moved in the right direction, even with still some uncertain factors. But buyers are still stretched on affordability. That is improving and will continue to improve with bank rate cuts. But sellers just need to remember how tough it is from a buyer affordability point of view, particularly for those who are coming off of 2, 3, 5 year fixed rate, which were sub 2% deals. They're in for a bit of a shock when it comes to renewing their mortgage, particularly if they're going up the ladder and increasing their mortgage size as well. So just scrolling down to average stock per agent. This is very much back of a fag packet, but you've got about 50% of properties are under offer, give or take. So if that's 62, including sold for the average agent, that means about 31 are under offer. Average estate agent fee is probably around £3,000 off the top of my head. So the average estate agent probably has a pipeline of about £93,000, give or take. And if they are turning over that pipeline 3 or 4 times a year, it's probably going to be 3 times a year. That means the average estate agency is probably bringing in about £280,000. So anyone watching this, if you are a traditional agent with those numbers, just interesting to know your figures. Average time to secure a buyer is 60 days. Rightmove also save 154 days to go from sale agreed to completion. So you've got around 7 months there. So someone listing today, if my maths is correct, is not actually going to be moving till March. So maybe put that out in your messaging as well, as we're coming towards the sort of last push of the year. Anyone who says, oh, I don't know, I'm not sure about, I don't want to move before Christmas, put your house on now. The likelihood is you're not going to be moving towards Christmas. So you might be wanting to talk to these people around if you want to get moved in early 2025. Now is the time to be hitting the market. And ride that wave of positivity that we're seeing. I think that's it for Rightmove. So I'm going to move on to Zoopla. So some great data out from Zoopla. So 0.5% annual increase. Homes for sale is at a 7-year high according to Zoopla at 33. And then it takes 2.6 times longer to sell a property if it has had an asking price reduction by 5% or more. And I believe from the Zoopla index, 1 in 5 or 20% of properties that hit the market are reducing their asking price by 5% or more. So if you are having any issues with other agents overvaluing, sellers wanting too much money, again, there's information I can provide on that to help justify the correct price and not go with the agents who are one of those notorious overvaluers and are just buying the instruction. So house prices over the first 7 months of the year are up 1.4%, which is great news. Takes 28 days to sell a home, no asking price, 73 days for those overpriced and needs to reduce by 5% or more. So Mr. or Mrs. Seller, would you like to sell in the first month, which we know means that you're likely to get a better price and go through to completion? Or would you like to take 2.5 times longer, which means there's less chance of you getting a better price and also more chance of falling through? Which one would you rather? They're hopefully going to choose the first one on that. In terms of market activity, demand is up, number of sales agreed is up, new supply is up, stock of homes for sale is up. So again, we're in a very balanced market actually at the moment. If you look at the outlook, which is great to see. It's neither favouring buyers or sellers, but I'm refraining from using the word stable that I've used a lot in the past. Based on again a conversation I had with David Mintz. So shout out to him. I think his podcast episode with me comes out soon. Just on that point as well, if you're watching, you don't have tickets for PropX this month, please do go check it out. Definitely would recommend it. But what I keep seeing as well on these house price indexes is that sales agreed continue to outstrip the supply of new listings. So, for example, it's all well and good saying, oh, yeah, well, there's been more sales agreed because there's more properties coming to market. But I keep seeing from various indexes that sales agreed is higher than number of new listings. So demand is definitely still more positive than the supply. But with the constraints on affordability due to where interest rates are, that does not mean that sellers can get overly ambitious with the asking prices that they're setting. In terms of house prices, they're on track to be 2.5% higher over 2024 according to Zoopla, and we're looking at about 1.1 million sales, which is a pretty average number for recent times as well. I was predicting around 1 million to 1.1 million sales at the start of the year, so good to see that that's on track as well. If anyone wants to compare that to 21-22, you would be a bit of a fool because that was a completely different market. And we're probably going to see similar sort of numbers next year as well, according to all the different forecasts out there. No material impact from the August base rate cut. This is interesting from Zoopla. Essentially, what they're saying is the real reason buyer demand for homes is 20% higher than last year is down to how the summer of 23 was just not a great time in response to the spike in mortgage rates. So sure, the election has helped, the base rate cut has helped, but actually, if you are looking at your figures being massively up on last year, a lot of it will have to do with how poor the market was this time last year. But we are certainly moving in the right direction. As I say, sales agreed are up 23%. And we're on track for 10% more sales than 2023. Supply of homes for sale is at a 7-year high, as I said earlier. So again, sellers who've got to be more realistic on their pricing because they've got more competition from other sellers. But great news is a lot of buyers weren't coming to market in recent years because they struggled for choice. They've now got more choice, which in turn is going to bring more buyers to market. They have houses to sell. Stock is going to continue to rise. Whilst it's at a 7-year high, according to Zoopla, it is not at a massive high, which would mean that property prices would drop significantly. We have not seen an oversupply of property to the market. Spoken about house price inflation at 1.4% so far this year, expecting it to get to 2.5% by the end of the year, which is great news. And if I scroll down here, we've already talked about this, but 1 in 5 homes have cut their asking price by more than 5%. I would be looking at your figures internally. What percentage of asking price are you achieving? If you are reducing your asking prices, like what percentage of them are, and then by what amount? Also look at how much money you're negotiating your clients from start offer to end offer as an average per transaction, pounds and pence, percentages, but also as a total amount for the year as well. So when a seller says, why will I go with you? If you can say, I'm much more likely to achieve your original asking price, I'm much more likely to negotiate you more money, you're showing a clear differentiation there between the other agents, as opposed to sticking it on Rightmove and selling it. If you can share that you'll get them more money, it should help justify your fee. So Mr. Seller, I'm 0.5% more, but what I found is from doing my research, I achieve 1% more for my sellers. So whilst my fee is 2.5 grand more, I'll get you 5 grand more in your back pocket. So you're 2.5 grand better off. Plus, I'm more certain to sell your property. The great news is it's an insurance policy. When you go with me, you only pay that fee if I successfully sell your home. What do you say? Just a bit of script and dialogue there on fees. Speaking about price reductions, in terms of the outlook, as I've just said, the housing market is more balanced than at any time in the last 5 years. Lower mortgage rates and an improving economic outlook have brought more sellers and buyers into the market, and that supported sales volumes. And I've kind of already got to that as well. As you'll see, they say in the last paragraph, their view is average mortgage rates will remain above 4%. It's sufficient to support more home moves and sales, and a little bit of healthy growth in household incomes because of borrowing costs for the overall health of the housing market looking ahead into 2025. So again, some real positives there coming out of the index. And I think that covers off where I wanted to get to on Zoopla. Nationwide. So interesting on the Nationwide House Price Index this month, they've talked about how properties with better EPCs are achieving a higher price for their property. So I'd strongly recommend you go and read that on the Nationwide House Price Index. Go and research on Google. What I have found is that EPCs are improving house prices because of the VAT situation on private school fees from Labour. Look at school catchment in terms of house prices. And then also the other thing I would look at as well, it's very random, but I'm just saying this one, but in terms of landlords as well, just thinking around EPCs and school catchments, you've got around 10 to 15% of landlords are exiting the market. But not far off 10% of all buy-to-lets all purchases are actually being bought as a buy-to-let. So there's a pretty much a level of supply and demand there. What's going out of the rental sector's coming back in. There's multiple ways that you can earn revenue off the landlord sector, both from the sales side and the letting side. I won't carry on too much on that, but again, if you want to know more about the landlord lead generation, please do speak to me. So Nationwide saying UK house prices fell 0.2% month on month in August, but they're up 2.4% from 2.1% annually. Fastest pace of annual growth since December 22. There is a recurring theme here we're getting positive results, which have not been seen since that kind of 2022 era. So we are moving back in the right direction. I said about the EPC side of things. If you look at the average price here, August 24, 265, and it's not a million miles away from where it was in November 2022, just slightly off the peak of August there on that. And if I scroll down, house price to earning ratio continues to improve slightly from where mortgage rates spiked. And you can see that again, we saw the worst of a market in the summer of last year in terms of price drops, and it's now moving in the right direction. Again, you can see it here. So that is nationwide. I'm going to move on to Halifax. Not much really to report on Halifax. Prices increased 0.8% in July, following 3 relatively flat months. Annual growth is at 2.3%, the highest we've seen since the start of the year. And if I scroll down, where is it? This bit here. Last week's Bank of England base rate cut, which follows recent reductions in mortgage rates, is encouraging for those looking to remortgage, purchase a first home, or move along the housing ladder. However, as I said earlier, affordability constraints and a lack of available properties continues to pose challenges for prospective homeowners. Against a backdrop of lower mortgage rates and potential further base rate reductions, we anticipate house prices continue a modest upward trend throughout the remainder of this year. So again, lots of predictions around modest growth and slight reductions in mortgage rates, not mortgage rates returning to COVID levels of below 2%, and we're going to see double-digit house price growth. Just very modest growth. Now, if I scroll down here, average price of Halifax in July last year was 285. It's now sat at just over 291. So Halifax and nationwide, slightly different there. If those of you are new to the market commentary, Halifax and nationwide are looking at mortgage mover data. Rightmove and Zoopla are looking at asking prices. We are then going to look at the end bit, which is land registry data, which is actual completed data. But as I said earlier, it does lag. So there's never a perfect scenario, which is why I've created this monthly market update actually to share roughly the half a dozen different indexes and explain what they all mean so that you can go and have educated, informed conversations with your marketplace to help them make better decisions in terms of their future moving plans. On to eServe. I don't think there's much to report on this. There's definitely been a confidence in the market following the base rate cut, and it very much looks like the bad times are behind us. Of course, you never know what black swan events are out there, and by black swan events, I mean things such as COVID, as the pandemic we had, the mini budget catastrophe of September 2022, the GFC of 08-09, for example. You never know what might happen, but in terms of where we have been throughout late 22 and 2023, we definitely have seen the bad times behind us. I strongly recommend you have a deep dive into the eServe house price index. There's some really, really good data there on that, but I won't go through it now. Home.co.uk. So quite interestingly, here on this third bullet point, they're saying the unsold sales stock count for England and Wales rose again over the last month, and it reached a 10-year high in August. Zoopla said it was a 7-year high. So both sources there saying that we are at a high for stock levels, but a good high rather than oversupplied to the market, as I said earlier. And if I scroll down to the sales market indicator, as you can see, number of sales continues to rise compared to the poor performance of late 22, early 2023. And we do seem to be in good shape and returning to a market which kind of runs parallel to a pre-COVID market. So your 17, 18, 19 market. Now, bearing in mind where interest rates were in 17, 18, 19 to where they are now, it's a very, very good performance and just is further indication of how resilient the UK property market is. Total stock for sales, so as I said, are at sort of a 10-year high there. If I move that across, you kind of, as you can see, around 2014. But we need so many more properties currently for sale for there to be massive house price drops. Of course, the government are talking about building lots and lots and lots of houses. We've heard that many, many times before from the government. I don't think we've hit the 300,000 quota for built houses in a year since 1969. and we are so far behind in terms of what we need to build. So if you look at net migration, so people leaving the country versus people coming in, we're just not keeping up with the demand. That goes for the sales side and rental side. Whether the people coming into the country are buying somewhere or renting somewhere, that's going to impact property prices in one way or another. Something I haven't shared actually, I think maybe briefly earlier, wage growth continues to move in the right direction. Unemployment still remains low and is half of the kind of long-term average. So all in all, we're in a very positive place. So last couple of bits. So headline statistics from mid-August for the UK House Price Index from Land Registry. So as I said, lag data, but shows that we're moving in the right direction. Average UK property price is 288,000. That's a 2.7% annual price change, and it's up 0.5% on the month. And if I look back at my homework I did before this, we are now only £977 or 0.34% down on the September peak of 2022. And prices are actually £57,875 or 25.16% up on the last 5 years. So that's going back to June 2019. So here we are on the UK House Price Index. So you can see how prices have done over the years. Now, if I click on the data table, you can then see where prices were in June 19 at 230 to where they are now at 287,924. You can look at the UK House Price Index and change this to your local authority. So, for example, mine would be Milton Keynes if you want to get a more localized average or compare what your local market has done to the national market. So that is the August 2024 UK property market update from Opening the Gates. As always, I hope you've enjoyed it. If you could do me a couple of small favors, if you're not already subscribed to the YouTube channel, please do subscribe. I'm trying to hit the massive number of 100 subscribers. And then if there's someone in your team, other agents you know that you think could benefit from watching this, please do share the channel with them. Please do give it a shout out on social media as well. It would do me the world of good, and I would really, really appreciate it. And if there's any feedback you've got on what you've liked, what you want to see less of, what you want to see more of, please do let me know. And finally, yeah, just give me a shout if you've got any questions or anything you want to discuss further. And that just leaves me to say thank you very much for watching. And I will see you at the start of October, where I'll be doing the Q3 market update, where I'll be looking at how the market performed in July, August, September. Stay tuned for start of October, and I'll see you again.